In today's episode of Retiring Today, we talk about your home and your retirement.
Pre-retirees and retirees ask us all the time, should I sell? Should I downsize? Should I have a mortgage in retirement?
We'll answer those questions, plus mortgage professional Jim Langen joins us to talk about the benefits of paying off your home and explains a reverse mortgage. Right now on Retiring Today. Welcome to Retiring Today. In this episode, we're talking about your home and your retirement. I'm here with Merkle. He's a certified financial planner. Lauren, you sit down with families every day and you talk about their retirement picture, and they're really concerned about what to do with their home and how that fits into retirement.
Well, the house is one of the most important assets for many pre-retirees and retirees. Many people have been in their home for the last 20 years, maybe 30 years, maybe even 40 years. So they've grown really attached, as you might imagine. And again, just from a monetary standpoint, it's a big asset. So it needs to be incorporated within your overall retirement plan. How do you address the loan when you pass on, or the house when you pass on? How do you make sure you can continue to afford the home throughout the retirement process? There's a lot that goes into the management of, from a financial perspective, your home.
Yeah, so they're looking at what? Should I downsize? Should I sell? Do I pay it off? What other questions are they asking?
Well, one of the big questions we get right now is, how do we downsize? Because the kids are gone, so they have this 2-story house, maybe 3-4 bedrooms. It's just the couple, so they don't need all of this space. It's hard to maintain. They don't want to maintain all this space. But think about where the home market is right now. Their current home might be worth $300,000, $350,000. If they're trying to downsize maybe into a ranch, so it doesn't have all the stairs, well, that's what a lot of other people want as well. So that kind of market has elevated in price. And what we're hearing from a lot of our families is they're trying to downsize. And historically, when you downsize, you can downspend. And right now, in a lot of cases, they have to spend a little bit more for less house. So how do you afford that throughout the retirement process?
Okay, so we've got 3 common examples that we're going to go through that I think really help illustrate what retirees and pre-retirees are thinking about when it comes to their home in retirement. So the first example is Bob and Betty. What's going on with Bob and Betty?
Well, Bob and Betty, they have their home paid for, so they've achieved that American dream. They've been in their home for a long time. It's paid for prior to going into retirement. And now there's a couple things that Bob and Betty, a couple things that are new to Bob and Betty within this home experience. One is before their taxes, the taxes that they paid on the home, and the insurance that they paid on their home was all coming out of their mortgage payment. It was coming out of the escrow payment. So they made one payment that covered the loan, the mortgage. It also covered taxes and insurance. So now they've paid off their home, they have to pay taxes separately in many cases, and then they also pay for insurance separately in many cases. So that's something that's new to them, and figuring out how that works within their overall budget. Because if they were paying $1,500 a month for their mortgage, but now the loan is gone, some people may think, okay, that's $1,500 a month of savings that I'm not going to have to apply towards a home. Well, they still have to pay taxes and insurance. So just the recognition, number one, of the taxes and insurance are still prevalent, and then 2, how do we incorporate that overall within the plan?
Okay, so the advantage is the home is paid off. That's great news. The challenge is the taxes and insurance, trying to pay that. So what's the plan?
Well, the plan is that and this is where this is involved within the income piece of the plan. So we come up with an idea of what is it going to take for you to live? And we use the base expense, which would include the taxes, and it would include the insurance. It would include important things like eating, right? All the necessities to do what it is that we're trying to do. And then on top of that, we have the discretionary spending, okay, within your lifestyle. So the house picture of it, the taxes and insurance, would be involved within that overall income plan.
Okay. Is that all we need to know about Bob and Betty?
Well, one of the other pieces of this plan, as far as it relates to the home, is how do we transition the home when we're no longer here? And this is where a lot of mistakes happen within the overall legacy piece of the plan. There's a couple different ways you can do it. Many people choose to incorporate the house within the will. Okay, so you write your will and you say, I want to gift or bequest my house to my 2 kids. Well, if the house goes through the will process, the benefit of that is that you're specifically outlining in legal terms how that house transitions to the two kids. That's a good thing. One of the disadvantages is that when it goes through the probate process, now in the state of Iowa, any probatable estate that's above $25,000, the estate legally has to hire an attorney. In the state of Iowa, they can charge a maximum of 2%, and then there's court costs, so total probatable costs typically somewhere around that 2 to 3%. So there's extra expense with the house transitioning to the two kids going through probate. Also, there's a minimum time frame of 6 months in the state of Iowa because there has to be 2 public notices of the probatable estate. So it's public, it's published in the newspaper, it's public, and there's extra cost to it and a minimum of 6 months time frame to transition to the two kids. Another way that you can transition this is you can incorporate a trust, which means now you create a revocable living trust, retitle the name of your house into the trust, and that accomplishes a couple things for you. One is it allows you to bypass probate. So the 2-3% cost that we were talking about, now it transitions outside of probate, not wrapped up in that expense, and the minimum 6-month time frame is eliminated as well. So oftentimes, if the house is titled within the trust, now you can transition that asset, a major asset for many people, to the two kids without the added cost, the 6-month minimum time frame, and it's a private transaction instead of public. So these are types of things that need to be considered with your home as it relates to your retirement plan. How do you afford it? How do you pay for the taxes and insurance? But then also, how do you transition it to the next generation?
Okay, some great information there. We've got another example, and this is Carol. Carol wants to downsize and buy a new home. She's wanting something smaller in retirement.
Yeah, and this is again, one of the questions that we get quite a bit is we no longer need the 4 bedrooms. We no longer want to or are able to walk up the stairs every day. So how do we downsize within the overall retirement plan? What some retirees are finding is in order to do so in this market, they actually have to take on a mortgage, which means that when they sell their house, the equity they have in their house is not enough to purchase this downsized replacement house. So they take on a mortgage, and we're going to talk later in the show about how that works in retirement, some of the pitfalls to look at, try to avoid, and from an affordability standpoint, it just needs to be incorporated within your overall plan. Here's how much we can afford to spend on the mortgage, and here's what impact it has short-term in retirement, but also long-term in retirement. Okay,
so the advantage for Carol is it's better for her lifestyle. She's going to downsize. She's going to have less maintenance, a smaller home. The challenge, of course, is how is she going to afford it? And now, Lauren, what's the plan?
Yeah, the plan is that it needs to be incorporated within the plan, right? So how much is it going to cost you to get the house that you want that doesn't have all of the space of the requirements of the maintenance and the stairs? And then what does that look like from a mortgage standpoint, a monthly expense standpoint, and what impact does that have long term?
Okay, and next, in our last example, is George. George wants to have a plan in place for long-term care. What do we need to know?
Well, this is a tricky one, and this one, just like all these planning strategies and techniques, is we need to address that well in advance of the need. Meaning that if George walks in or comes into the office today, or George's spouse comes into the office today and say, George needs long-term care, it's much harder than to be reactive and put something in place that's really effective, as opposed to 5 years prior to George needing that long-term care, you put the plan in place. So as it relates to the home, you need to have some kind of action plan in place. An irrevocable trust is a strategy that some people use to help protect that asset against Medicaid, right? If you need to spend $6,000 to $10,000 a month just on your long-term care, a lot of people don't have those resources. It really depletes what you have saved, and now you want to protect that home, so that's one strategy that you might want to look at. There's a whole host of strategies that you can implement. The key is that recognizing that there is a risk, a long-term care risk, incorporating the different methods of how you might want to tackle that risk, and implementing the right ones that are right for you throughout the course of your plan.
Okay, some great information on your home and your retirement. Coming up next on Retiring Today, we're bringing in Jim Langen. He's Market President for Liberty National Bank.
You have worked for a long time. There are so many decisions to make about your retirement. How much income do you need? How not to run out of money? Now is your chance, and you get one shot to get it right. Attend Merkle Retirement Planning's Passport to Retirement. We will discuss how to create tax-free income, how to avoid the next market meltdown, and how to wring every dime out of Social Security. Your time is now. Classes fill quickly. Call or text today. Zero cost to attend.
You made it. Years of hard work, investing, planning, and now you're here. The long-awaited reward you spent a lifetime looking forward to. But what now? After years of growing a nest egg, now you may want to manage it. Use it to fund your dreams. Make it last as long as you need it. And leave some for those you love. So what do? Wall Street continues to be uncertain, and some conservative options have dropped through the floor. How do you maintain opportunities for growth and reduce risk of loss from market changes? That's where we come in. We are Merkle Retirement Planning, your personal retirement planners. From investments to tax reduction strategies. With our Merkle Retirement Method, we can help you reach your retirement goals. You worked a lifetime to get here. Let us help you enjoy it to the fullest. For a complimentary visit, simply contact us today. Merkle Retirement Planning.
Welcome back to Retiring Today. This episode is about your home and your retirement. We're excited to introduce a guest that we have with us today. It's Jim Langen. Jim is Market President of Liberty National Bank, and we'll talk to Jim in just a moment. But first, Lauren Merkle. He's a certified financial planner. He sits down with families every day and they talk about their home and retirement. And Lauren, this is an important subject to cover because it's important to your families.
Well, it sure is. And Molly, one of the things that we're talking about all the time on this show is how complex retiring today is. It's no longer just we show up at work on Friday, we don't show up on Monday, and now we get to live the next 30 years on vacation. It's so much complexity that goes into retirement. So what we need to do, what we have done at Merkle Retirement Planning, is develop a network of specialists to help us in all of these different areas. Network of CPAs, network of attorneys, network of lenders. So Jim is here with us today. Thanks for being here, Jim.
You bet.
We've known each other for probably a couple years.
Yes, sir.
And worked together. He works with he's our network professional for mortgages, lending, other banking needs, and today to help us out with some of our mortgage conversation.
You bet.
Yeah, Jim, so tell us just a little bit about who you are and what you do.
Yes, thank you, Molly. I appreciate it, and I'm very happy to be here. Thanks for inviting me. Not to date myself, but I'm a 30-year veteran of the banking industry, and I run a bank called Liberty National Bank. It's in Johnston, and we're a traditional community bank. That's, I think, one of the reasons why Lauren and I have been able to forge a nice relationship with each other is because of the way we do business. Our bank was founded 15 years ago by a bunch of local investors in Iowa, so we're an Iowa-based bank, to fill that void where they saw in the marketplace the big banks were just really not serving everybody. And so our bank was founded, and we've been very successful. We have 9 locations throughout Iowa and South Dakota, and we're just doing a good job here in Des Moines and looking for long-term relationships.
Okay, so the pre-retirees and retirees that Lauren and his team sit down with have a lot of questions about mortgages, so you're going to help answer some of those for us today. And one of the big ones that they get is, what does applying for a mortgage look like in retirement, and how is it different than maybe when they were working?
Well, the main thing you have to look at when you're when you applied for mortgages pre-retirement is the fact that you had W-2 wages, and in many cases, and you're not getting the amount of W-2 wages that you had, so you've got to use the potential Social Security wages that you have and the retirement pension income, Social Security benefits. I think I mentioned that already. So mortgages, when a lender goes and underwrites that mortgage, they have to look at that income that you have coming in. So that's the biggest difference, Molly. In many cases, it can be very similar if you've done a good job planning with Mr. Merkle.
Jim, and one of the things that I've heard is that the lending laws have changed a little bit since 2008. 2008, as we all know, the lending laws were a little bit more liberal, right, allowing for loans in retiring.
Yes.
Has that changed much today? Are retirees finding it to be a little bit more challenging obtaining a mortgage in retirement as opposed to pre-retirement?
Yeah, I wouldn't say it's changed for one segment.
Okay.
It's really changed for every segment. So, certainly we went through a very tough time in the financial industry. We went very, very tough time in the country with the recession. So lending tightened in the country, specifically in residential lending. Residential lending is a unique part of lending because it's the government protects consumers as best that they can. And even though all of us don't like all the paperwork we have to do all the time and filling out forms and, oh my gosh, the government's looking into everything that I've got, it is necessary because we have experience with people getting taken advantage of or things not working out the way they're presented. So that's mainly what changed. In addition, mortgage companies and banks are a little more concerned with how they're doing things. So there may be some areas where they delved into before 2008 that they're not delving into now. But really, to answer to the crux of your question, post-retirement, pre-retirement, the qualifications are the same.
Okay, so if the income's coming from W-2s versus Social Security or pension, they're not necessarily looking at that differently. What they want to know is, do you have the income coming in, how much, and what source of income, and the longevity nature of that income? Yeah,
certainly the documentation piece of it is the important part. And when I say the documentation piece, it's the verification of affordability.
Right.
I mean, bottom line, my business, the banking business, is really not rocket science. I wouldn't be in it if it was. But
I like your honesty there.
Well, that's kind of the way it goes. But it is very tough to practice. It's not for everybody. So it's not hard to understand that we have to verify how you can pay a loan back. Okay. But at the same time, that's not the easiest thing to do.
Okay. Well, I think that's an important takeaway because one of the rumors that I've heard just talking with so many retirees is that they have had some challenges getting a mortgage in retirement. So that's good news, and what that means is even if you're retired, it is possible and maybe even probable that you can get a mortgage in retirement. And now it's a matter of how do you incorporate that mortgage within your overall income plan to make sure that you can afford it, not only at point of retirement or at point of purchase, but also 10, 15, 20, 30 years down the road as well.
Okay, so that mortgage that we are talking about, a lot of people ask about the benefit to paying off your home early in retirement or keeping a traditional mortgage schedule.
Yeah, there's not a cut and dried answer to that question. You guys talked earlier in the segment about the taxes and insurance and also the homeowners association fees that I can't remember if you said that or not, but those things a lot of times are incorporated into your mortgage payment. So if you pay off your mortgage early, you have to consider those things because it's on you to do that. Now, we at the bank and other financial providers can help you do that. We can set up escrow accounts from your other bank accounts, which is a service we provide that it's free of charge, to help you do that. So, in March and September, you just transfer money over and you write a check to the government, and then once a year you write a check to your insurance agent, and everything's covered. You already have the money there, so it's not really a worry if you do that. But there are other benefits to having a mortgage around. Those are things that banks shouldn't advise you of, cannot advise you of. Folks like Mr. Merkle and then also tax advisors, CPAs, really need to answer those questions on, hey, is it beneficial for you to do it? We at the bank can help you, can direct you to folks. Obviously, we direct them to you and then others.
And that's where this networking relationship really can add value to the retirees in just determining the answer to that type of question. So if you're thinking, let's say it's a 15-year mortgage, and you're 8 years into it, and you're thinking, I have the resources, should I pay it off? Or should I continue on with the amortization schedule and just continue? There's a lot of factors that would influence that, and then we can work together and look at both of those different scenarios. What happens if you pay it off?
Yeah.
What happens if you continue on with the amortization schedule from a financial perspective? Incorporate both of those scenarios within the plan to really give you the information you need to make the best decision for you.
You bet. As I mentioned earlier, if I could just add to that, our client's success is really our priority. So if it's successful to say, yeah, pay us off for you, then that's what we're going to suggest. Because both sides of the balance sheet is what matters to us in our business. we'd like, if you don't need a loan or if it's advantageous to pay it off, guess what? Those dollars are coming through our bank in the form of deposits. So we're very happy about that. So we're really not in the business of stopping you from doing one thing so it benefits us.
Yeah, and
it really is a two-way street.
Yeah, and one of the benefits of working with a professional like yourself is structuring the initial loan when you get that mortgage in a way that gives you that type of optionality, right? Where there's not going to be a severe prepayment penalty if you pay off the loan 5 years into your 15-year amortization schedule, or if you decide you want to continue that on out through the remaining 15 years. So how you structure that initial loan is an important part of it.
You bet.
Okay, should we talk about reverse mortgages? I know your clients ask you about them a lot, right, Lauren?
We hear about it, right? We do get the question, and I know that reverse mortgage market has changed. It's evolved, but there's still some things to be aware of, and we do get a lot of questions about it.
All right, Jim, what do people need to know?
Well, reverse mortgages are something that I would tell you we do not see a lot of. You see a lot of that on late night TV. You've got, gosh, I was just going to think of the guy from Price is Right that's on there talking about.
Bob Barker?
I don't think it's Bob Barker. You're dating me again.
Drew Carey.
I don't know. It's one of those guys. But
Drew Carey now.
Yeah, there you go. Yeah. But kind of peddling those. But they can be a useful tool. They are. When we say reverse, it's really just a second mortgage or home equity loan. Again, as I said, Molly, this business is not complicated to understand. I think sometimes we give you a lot of data that says, oh my gosh, it's so complex. We would help walk you through that, but also explain the dangers. If you are planning on, let me back up. When you take out a reverse mortgage or a second mortgage on your house, depending on the equity that you've earned or have, we'll do a calculation, figure out how much we can lend you per our bank's policy or any financial institution's policy. And then you can take those funds out, put it in a bank account, and use it as income if you want. Obviously, there are payments to be made that can come out of there as well. But then, if by the if person who has it passes on, there may be little or no value to the house once it's sold because it will have to pay off the reverse mortgage. So if you're planning on potentially leaving it to a child or someone else, that's something to consider in that case. But it's a useful tool, or can be a useful tool.
Yeah, it can be, and most people would consider the use of a reverse mortgage within the overall income plan, right? They're looking to supplement their income, and one of the biggest assets that many people have is their home. So how can they deliver extra income from this asset? And then the trick is what are the nuances within this reverse mortgage or this loan? And what are the long-term lasting consequences of incorporating a loan like that within the overall plan?
Yeah, we would walk you through that. I mean, one of the important things that I believe that we offer as a community bank is the time factor, is the ability to have you walk into our bank or we walk into your house or wherever you want to meet and walk you through the different options as you're talking about or other things, and then give you the pros and cons.
It's information.
See what happens.
Yeah,
it's important.
It's information that's important. Accurate information you can use to help you make better decisions, whether it's on your income, your taxes, your investment planning, or your home.
Jim Langen, Market President of Liberty National Bank. Thank you so much for joining us.
You're welcome. Thanks for having me.
We'll wrap up your home and your retirement when Retiring Today with Lauren Merkle continues.
You have worked for a long time. There are so many decisions to make about your retirement. How much income do you need? How not to run out of money? Now is your chance, and you get one shot to get it right. Attend Merkle Retirement Planning's Passport to Retirement. We will discuss how to create tax-free income, how to avoid the next market meltdown, and how to wring every dime out of Social Security. Your time is now. Classes fill quickly. Call or text today. Zero cost to attend.
It's your retirement. How will you live it? How will you be remembered?
Will you be able to take me on vacation?
Will you be there for my ball games?
Will you teach me your values? You'll be able to play with me.
Oh, help me go to college. How will I remember you?
Have the retirement you dream about. Contact us today.
Welcome back to Retiring Today. We've been talking about your home and your retirement. Lauren Merkle, certified financial planner here. And Lauren, give the people kind of the takeaways of today's episode.
Yeah, one of the big takeaways is if you have a mortgage going to and through retirement, make sure that mortgage analysis is in your plan. Does it make sense to keep your mortgage, or does it make sense to pay off that mortgage prior to going into retirement? If you have desires to pass your house on to beneficiaries, your loved ones, your kids, your grandkids, make sure that you have an adequate legacy plan specific for that house so that transfers in the most efficient and effective way to your loved ones. And when it comes time to determining do you want to have a mortgage in retirement, make sure you're working with a qualified mortgage professional to get the right type of mortgage, and make sure you're incorporating that payment plan within your overall income and retirement plan, especially if you're considering a reverse mortgage throughout your retirement.
And the mortgage is just one piece of the retirement puzzle. You've kind of put together the Merkle retirement method, and it has 5 components, which you'll go over very briefly, but you'll go over in much more depth in your passport classes, which is a neat opportunity for people to come and talk about all these components.
Yes, there's 5 components to the Merkle retirement method. The first one, which is really important, is the income planning piece. We need to make sure you have adequate income at point of retirement and also through the whole course of your retirement. When you take income, you know you're going to have to pay some taxes. It's about mitigating the impact of taxes so you can increase your spendable income. The healthcare, long-term care environment, the estate planning, the legacy plan of your overall retirement plan, and then finally the investment piece.
Okay, so the passport classes are a great opportunity to talk about this more in depth. Tell people what they need to know about those.
At the passport class, which we hold around different universities around this metro, it's about a 2-hour class which we really engage in what this Merkle retirement method means to you. How do you structure your income when you go to and through retirement? How do you mitigate? What tax strategies can you put in place to help increase your spendable income? The healthcare, the long-term care, all of those different components we address specifically in the class to give you some good takeaways, more information to help you on your journey to and through retirement.
And those classes do fill up quickly. Text the number on your screen if you're interested in the passport classes, or if a visit is more your style, you can text the number on your screen and text the word visit. But another way to learn about your retirement is to watch this show. It's Retiring Today with Lauren Merkle, and we thank you for watching.
You have worked for a long time. There are so many decisions to make about your retirement. How much income do you need? How not to run out of money? Now is your chance, and you get one shot to get it right. Attend Merkle Retirement Planning's Passport to Retirement. We will discuss how to create tax-free income, how to avoid the next market meltdown, and how to wring every dime out of Social Security. Your time is now. Classes fill quickly. Call or text today. 0 cost to attend.
From our family to yours, we hope you have a wonderful weekend.
We hope you enjoy the show.
Good night, Blake.